whatnot, you know. So why should you have any emotions? You know that risk of $50 fucking worth the risk of earning $300. You such know it, you know. I don't even have, I have zero fear, and I also have zero emotions. Either that works or it doesn't, you know. 3 of my ideas per day work normally, like at least one. So what else do I have to ask?
I don't disagree with any of them. I was thinking about this specific scenario when you've had a really good trade, you believe the trend is going to continue, and you hesitate about taking the second trade because you think to yourself, don't be greedy. And in that scenario, it actually is a good thing to be greedy and believe in the fact that your analysis is correct.
Yeah, absolutely
and not
agree.
Stop yourself pushing the button.
Then, if your analysis says that, you should believe it. Yeah, I believe that. I mean, if you know about the probability chance of your analysis, you should definitely do it. I'm too passive in these moments too. I would love to be so aggressive like fish that I can get in instantly if it moves, because I have some experience with candles that you can get in really heavy, you know, like adding 10% of your whole entire balance or some shit like this. Or you know, like every but I don't have the balls for that. I'm greedy definitely and stuff, but I know also that I might be not have that safe trading style yet to kind of do these types of things that would go.
I'm just
can do
it. I'm just trying to figure out why the human nature is so weak, and psychological terms like fear and greed.
Give us a specific example.
Oh.
You're talking about fear and greed. I believe that we are programmed a certain way, so that makes us unsuccessful. So, Daniel, tell me a scenario of where you experience fear or greed in your trading.
I didn't experience fear, but I experienced greed, so...
If real money is in play, I tell you that.
If real...
Don't even have to be much.
Indeed.
Money and you don't want to lose it, you know? It's like, we was cave people, dude. And we was like kind of going out and collecting things. Yeah, and like picking up things or like killing some animal and bring that home for eating it. So losing these types, and this is money today, you know, and losing these types of things, this is completely against our nature. We want to defend our stuff, you know. This is some really basic animalic human behavior is in all of us, and nothing bad. Like whatever Bible teach you, greed is in the end something really nature, you know. I think greed is good as long as it's not on the backs of others or going against your idea of kind of making money. Then it's a good thing, definitely. Sure. Fear too. You know, you're scared to lose your profits in the markets because of it's money that you have. Makes you also scared to probably the idea of risking money, being okay with losing this $50 to kind of like making money and not adjusting your stop loss directly to zero in order to being safe in dots, you know.
Yeah,
my mentor told me one thing: to trade the markets, you need. He told me one advice: to trade the markets, you need calm mind and still nerves. Like, you know, very hard to be like a Spartan or something like that. Still nerves and a clear mind on tradings.
If you place a few hundred trades, then that will help.
At a time? No.
The more trades, just
dead.
Yeah, you need sample size. That's what I told you a week ago or 2 weeks ago. Basically, always 1 or 2 or 3 or 4 trades don't tell you anything. You have to have a sample of trades, and this is basically also the same as how the markets work. Like, I trade on a small time frame, and there are small movements, like we have the small wave, the 3 waves and the 5 waves, and everything works out, and then somebody else, like a swing trader, say this is just noise. But it's actually true, but this is the same pattern repeating itself again, translating into the bigger time frame. And with your trades as such, it's the same, exactly the same. You make 5 trades that tell you nothing. You make 25 trades and put them in a box, and then you make another 25 trades and put them in another box, and then you have the same effect. Like you have 25 trades, you can analyze them. You say, okay, it went well, and then you make another 25 trades, and you analyze them as well, and they maybe went bad, and then you put both of them together, and this is the same as trading on a higher time frame. And by this way, you have a good way of analyzing your probabilities.
It's also a feeling thing, I think. Like the emotional part kind of shut down automatically, not even if you kind of sit there and analyze. But I mean, you feel it, you know that you're profitable, you know that you make small, stupid mistakes, which may be hindering to earn a lot, but you make small little steps, And these mistakes, they're getting smaller and smaller and smaller and more raw and more raw and more raw. And I think like if you reach this step, then switching around from being a little bit pessimistic and afraid of, oh no, or like optimistic too. Now the optimism have to still get killed. I have to say that this comes first. Kill the fucking optimism. $3,000 on the account and start. You have to kill your fucking greed.
Right.
The problem is that the emotions are happening in real time, but the probabilities don't.
Ooh.
They're just a result of what you did. Like right now, this feels really good because you're making a massive profit, but this is just one trade, and then you let's say the following 5 trades, they are also good, but you're trading them with too small size, and so the outcome will be not that good, but the way you feel by doing it will be the same. But on a monetary side, this will be much different, and if you risk too much, this is exactly the same.
You should probably in the beginning, before you really understand the probability of certain setups you have in front of you, you should always stick to the same risk. You fuck up your plan of making money.
Yeah, that's partly right.
At least that's what counts for me. Counts. I have like maybe 1 or 2 situations where I know I can go a little bit more heavy in, but generally I keep the same risk, and sometimes it still happens that the stupid idea where I risk them 2.5% really doesn't work out, and I bite myself in the ass every time. And that advanced thing which you really should start after you know your shit.
Yeah, that's right. That's
safer with 1.
Well, yeah, but on a later time, this is not correct anymore. I mean, Frankie, you know what I mean. Like, this is a very high probability setup, and the market situation looks really good. This is something you decide in real time before you enter, and then you just keep scaling in like forever because this is gonna work. And but you not just keep pressing randomly the button. You do it in a controlled fashion. So it's not like all in. I mean, you see there's a pullback, the price shoots up, it's pulling back, you scale in, it's pulling back again, you scale in again, because your target's going to be reached for sure without a major fallback, something like that.
It's what I get used to at the moment. Like buying the complete bottom in a formation where I expect it to break out on the top. So that's the first thing, and then the second thing is really interesting is watching the candle itself on 3 minutes or 7 minutes or 5 minutes. Candle reversals, or if you watch on 30 minutes, it's quite fucking interesting too, because exactly every candle always draw back 50% or 2/3 candles, so that's you mostly can find a really cool perfect moment of reversal. You know where you have to watch for the reversal pattern, like when it gonna happen, you know. This makes really fun, I have to say that.
Yeah, that's the point where trading is actually something. It's not a job anymore. It's not like something you do, like this thing you do. This is something. It's getting actually exciting to do it. If you do stuff like that. Like you see there's a consolidation and the volume is going up and there's a typical squeeze, and then this is where you really load up on size. But this fucks up your statistics later about the sizing. So you have to do that in several steps. Like in first, like Frankie said, you always have the same risk. If the trade goes bad, you're losing the same percentage every time. But this
should be as low as humanly possible. In case it does fail, the setup fail and formation kind of breaks out into the different direction or something. Take the loss of 0.25%. Fucking $10,000, that's nothing. That's $25. That's nothing. You don't feel that at all. You can do that 10 times a day before you feel the effect, you know, on your bank account.
Yeah, but at a later stage, if you could be trade on a different level, if you now let's say it in another way. If you trade like that, a machine will do that probably a lot better.
No, I know.
Exactly, because a machine doesn't have emotions and is automatical.
Yeah, but the emotions, that's what I want to go to. That's my goal, because Frankie is right in what he's saying, but that doesn't make you a good trader. You become the good trader if you can use your emotions and what you see and you can actually see what is happening right now. Like there's a squeeze, there's a very high volume, but the price don't move. You know there's something building up, there's pressure building up, and this is where you buy. This is where you really load up on size. And a machine would not do that, but you do it as a trader, and this is where you really make the money. This is a difference between a machine and a human. You use your emotions to get better in trading.
You get also better entries. I really have to admit that, because the machine is faster.
Yeah, like my VWAP strategy is a machine will do that a lot better than me. That's for sure.
Oh yeah.
Because the moment I see the setup, it's mostly over already. I'm 80% of the time I enter late because I don't watch my monitors, my market monitor all the time.
Oh, me too. And isn't it better to probably have a bot running in the background where you kind of seeing where you get warned in the moment of you have a position open, and that is a really small test size, and the rest happens manually. And maybe you have a lot more opportunities over that, which maybe like, yeah, they are small size and stuff, but you know, you can add on yourself, as long as like, you know, you have a mobile phone with you if you're outside, or you're not watching that screen, but you have a pop-up. Zemi, I also believe in some way that Zemi automatically probably would be the most profitable, because we are human beings, you know, we cannot.
Yeah, but...
And 6 charts too, I have to say that. I can't handle it. If I put more than 6 charts on my monitor, I lose attention on all of them. Miss still things out, even I have like 8 charts on my fucking monitor.
Yeah, that's only partly right, because you're taking the trades on. I mean, okay, if you're a beginning trader and you're risking always the same stuff and whatever, it's always the same. You have a machine that bases the trades on RTR or whatever, then you can do that. But if you trade like you trade, I mean, you and me trade, Frankie, then this is a different thing, because we decide based on the structure of the market how we gonna take on the risk.
I get in, you know.
I mean, if you see if there's a VWAP reversal and there's a massive candle after that, then then you look at it and they say, "Oh, fuck it, this is too late." So you wait for a pullback, as example. But a machine will be inside the trade already. But this trade will be worthless because it's, as you said, it's minimum size. So will not scratch your account at all.
I think there could actually, you could probably program something which kind of could compensate for it over taking the angle of the VWAP in consideration.
Yeah, I was planning to make
a lot of that lead probably a lot of backtesting, that you find out what scale in level is logical after by what angle of VWAP bending or something like this. You know what I mean? If that's technically possible. I'm no programmer by any way, but that should be a way of kind of making VWAP kind of helpful in trading.
Yeah, I think that's possible to do. But from my experience, the market structure is a lot more important if you do trades like that. I mean, if you trade with a 2-pip stop, the market structure, what has happened before, I mean, what has happened immediately before is very important.
Oh, it is. It is.
I mean, if you have a 20-pip RTR, there is no point entering with a 2-pip stop. You're gonna get stopped out. I mean, this would be just luck. Buy a lottery ticket is better. Probably cheaper too.
Lots, you guys tell me lots of useful information. I need to, I want just to listen more to it.
That's why I'm personally against all these educator idiots, because I mean there are a lot of good people, but all the ones that teaching you the stuff you can find for free anywhere. This is just nonsense information, because this doesn't make you a good trader. This just makes you survive. But you don't want to survive, you want to make money.
It doesn't. You see the people like Open Forex, they're at least nailing the essentials and broadly talking about them. You know, you could go in a lot more in detail, and you have to educate yourself afterwards anyways, who should not be in this business anyways. But I think like there is people really like, I mean, you can't tell everybody everything. This is impossible too. You need time, you know? You need time for reading into all this shit. I mean, how much you should charge someone for kind of like, yeah, I teach you everything. To teach someone everything, and I achieved within the last 9 months. This probably depends on how fast that person is too. That probably takes 2 years or something. You know, like how the fuck should you charge for that? So they can't never teach you everything. That's the point.
That's not possible because you have a different personality.
Yeah, that comes on top of it too. Yeah, but the structure, the techniques. Let's say the techniques. You know, what you make out of it is still up to you.
Yeah, but
just last but not least, can I cut the bullshit with indicators out and stuff, and try this out and try that out and
yeah, just take a course, pay a few $100, and then you get your basic education. But that's it. No, and don't let somebody teach you a strategy. This is just not working. Because you are the holy grail yourself, so you can't just copy a strategy from somebody.
Basic stuff everybody should use.
Yeah, that's what I meant. The basic stuff, and that's just buy for pay for a course, and then you're done. Like, this is a one-time thing, and you know the basics, you know what's going on, you know how to do the stuff. But from there on out, you have to do things by yourself.
Yeah, think by yourself, exactly. And who doesn't do that will never go further and will never really trade. That's the point. To further develop himself also, getting into volume profiles, getting into like the whole structure of markets and stuff like this. And if you start to do that, then you're not far away from trading really successfully even.
Yeah, that's correct. Like what I do, I mean, I see that a lot of people, if I say I'm entering here and I have a 2-pip stop, or my trade fails after 2 pips, well, you both know I don't use stops, but my trade will be a failure after if the price drops like 2 pips or like 3 pips depending on the time of the day.
Yeah.
And then people laugh at me. But yeah, so what? This is just what I do. I don't say you have to do it. You have to trade like that to be successful. If it's not your beef, then do something else.
Yes, yeah. Yeah, exactly. Exactly.
Yep, definitely agree.
Guys, I have to leave for now because I need to take my night pill.
Okay, good night.
Have fun doing that.
Thank you.
I think that's also what makes the whole trading industry to be an evil thing for the public. Because everybody thinks it's just a job. This is just something you do. You press the button here, you press the button there, and then you're done. But this is not what it is. It's a business.
I just think they have no idea about the emotional pain, suffering, and effort that goes into something to make money that could probably be achieved a lot easier with any other job.
Yeah, that's exactly my point. Like I talk every time I talk to my accountant. we talk on the phone fairly often for other stuff as well, and then I say like, I mean I form the conversation like a question like, what do you think if we do it like that or if we do it like that? I mean accounting specific questions, and then he just answer me, it's your company, do whatever you want. I just make the accounting for it. But that's
so your accountant doesn't aspire to be the best accountant ever. They just keep things simple, do their job. And
yeah, that's what he's saying. I'm just an accountant. I make sure the government not gonna make you any problem, and they're gonna tell you if you do something wrong. But I'm not gonna tell you how to do it because it's your company. And if you trade, it's the same. It's exactly the same stuff because you're basically running a business, a one-man business. And if you're good with scalping, like people keep telling me all the time, well, if you make a 6 pip trade or a 9 pip trade, well, I take what the market gives me. If there is a resistance 6 pips above, I'm not gonna take 11 because it's never gonna happen. So I take what the market gives me, and then people say, "Oh, this is so expensive. The cost of trading is expensive." Yes, it's true. I have days where my broker makes more money than me.
But without you wouldn't make as much money anyways. On that
no,
day
I would make zero money if the broker would not give me this opportunities. I mean,
exactly,
if the broker would not give me the tools to do it, I would make zero money. That's my point of view. Of course, it's true that the cost of trading is very high if you're doing that. Instead, okay, you make one swing trade, it's gonna last you 6 months, and you're gonna pay 2 pips spread and whatever. $100 swap, and you're gonna make $5,000 on this trade. But yeah, and it's gonna make 1% to your account.
I have to say, I have a couple of swings running too and stuff like this on DAX, and hell, they are fucking profitable. About it, they are good money makers, and they're a little bit safer. They take intensively much time, and they don't bring me. And what I don't like at them is actually the fucking exposure, you know. Because of you sitting there and then like something happens news-wise or something, and your estimated profit of 500 pips is such reduced to 200 because you could save these 200.
Yeah, and then you have to wait another 2 weeks until it gets there.
Count that down to the trading days, and you see, oh fuck, I such made 0.2% or something per whole day. If I count that over the last 10 trading days, so wow, fuck. You know, that's not how, if you're really thinking in, okay, how percentage-wise per day, because of that's the most interesting number.
Yeah, that's my point, yeah. So you make your one swing trade, and it works really well, and you don't care if Trump tweets something, because it doesn't affect you. I mean, it does affect you, but it affects you only by time and not by money.
Can't because...
Octo, are you still there?
Yeah, I'm thinking about you, dude, and your euro-dollar carrying on down.
Oh man, it came down exactly to my target profit. I covered too early, my friend.
Where was your target?
Let's go back to just going back to swing trades a sec. With swing trades though, you miss out on so much of potential profit because yeah, you get the big move, but there's so much like little moves that you could have got before. You know, if it goes up from I don't know 1.4 down to 1.2 and you've shorted it, but in between there, you know, you could have made so much more money just by taking a few day trades or even just holding a few day trades for like, you know, maybe 1 or 2 days rather than taking just a whole big move. So
yeah, or trading against your own position.
But yeah. I mean, I take the occasional swing trade, but mainly it's just a few days, maybe, you know, 1 day, maybe. Yeah.
And your position size is a lot larger. That's another part. And then I just cannot really grasp the argument like the trading of the cost of trading is higher, and the broker makes more money than you. That's maybe true. Let's just say it's true, and then whatever. But I still make a lot more money by doing that. And what Frankie said before about the market exposure, that is also something I don't really be friendly with.
You do because of you know how to set stop loss on 3 minutes.
Yeah, but this makes no difference.
Really can't realize. Look. If your risk reward normally is like somewhat around 1 to 3, like or 1 to 4, like most traders and stuff like this, and they need on day trades or like your typical 40 to maximum 80 pip you can catch on a day. They have a 8 pip stop loss or something. Then you won't make more money than on swings. I don't believe that. You only make more money on swings if you can realize this small trades.
Yes, that's absolutely correct. And that's also what we said before about trading the book, like being a human machine. That doesn't make sense. I mean, if you just start to trade, then that is a logical thing to do. But this doesn't make you a trader, because if you be able to scale in on a trade that works and you see the momentum is building, and then you put on more size, this is what makes you real money, and this is where you beat the machine. Because if you just trade the book, if you just trade, you have always the same risk percentage-wise, no matter what trade it is, and you always do the same activity. Then just pay somebody on Fever $20 to program it to you and let it run. There is no point to doing it yourself.
I probably really can I have a bot running too nearby. It's actually nice to have an extra % per day without doing shit.
Yeah, but this won't happen.
Works. Oh. I mean, there's algos make a lot more than 1% a day, dude. Kinda safe too, without stupid scale in wrong trades and stuff like this. There's like really good bots actually, which is probably even better than me. Add more risk.
Yeah, you don't adding more risk if you're scaling in. Your risk remains the same. That's what I meant. Yeah,
no. I mean these marginale system bots, you know them. They kind of mostly scale in even in losing trades, and then you get fucked big time and stuff like this, you know.
Yeah, this is just junk. This is not considered.
Oh, I know. So there's bots avoid that and can take nice entries and nice exit, no doubt about it. Yeah.
Yeah, that's what makes you a trader, because a machine cannot see the market dynamics. But you can, because the market, everything you see, the candles, whatever the price, how it moves, that's just mass psychology. And if you know how to read that, then this is your edge, and then that's why you can make entries that have basically no downside. And if they have downsides, you have no problem with, oh yeah, good, it dropped on me, so I can buy again with a better price.
I see a lot of traders online though, well, occasionally saying, you know, oh, you can't make money day trading. You have to, you know, there's no money day trading. But I would definitely argue against that, to be honest. Like, yeah, I would definitely argue against that. I don't know what their reasoning is behind that, but I don't know how you guys feel about that. But I know Swingfish, you make
yeah,
money
that's
on day
right.
trading, so yeah.
The only argument they have is like the cost of trading. Well, it's not my fault that your broker fucks you, but it doesn't mean every broker does that. I mean, I need 0.7 pips to get green on my P&L. So if I have a 3 pip stop or a 2 pip stop, that means I have my risk is 2.7 pips. And now imagine how much size I can put in there if I have like $30,000 on the account. This is massive.
Yeah, that's true.
And then these people come on like and say, okay, there is a risk, which is moves the market may make you cannot anticipate, like the gaps or something like that. That makes it very dangerous. But then again, nobody is stupid and is that stupid and trade 100% of their capital on a scalping account. Nobody. I mean, nobody who is serious in trading. I mean, I know people who do that, but they also have other assets outside of trading.
Yeah.
And a lot of people mistaking that. Like they say, okay, I'm gonna commit $10,000 to trading, and then they put $10,000 on an account and day trade it. And that's not really a smart idea.
I would say also with swing trading, just going back to what you said, I think you do have more exposure because with day trading, you can just trade, you know, whatever's happening in the markets, you know, on a sort of a more macro scale, as it were, you know, whether it's Trump or it's trade wars or whatever. If you take every day as a new day, you know, and you can make money within that day, whether we're in an uptrend or a downtrend, you know, you can make money within that day. Whereas if you're swing trading, you know, you're more exposed to long-term sort of events, aren't you? In sort of a more macro kind of economic situation.
Yeah, that's right.
Which you often can't predict anyway. So yeah.
The margin is in use, and yeah, and then there is the problem with the swings itself, like the market structure. Like there is always a pullback, and like the market goes up and then it pulls back by 61%, and this is just very normal. This is a normal thing. This is not nothing. We're not worried if we have a 61% pullback, because this is normal.
Price moves in waves, yeah. It never moves in.
But 61%, this is so much you return on your profits. And you have to wait another 3 days until it's back up. And this is just something I'm not so, I don't know. Like you see, you're up 3%, or let's say, just make a nice number. You're like up 1%, and then you're gonna give back 0.6% of this gain because of the pullback. And you have to wait another 2 days to get it back.
Yeah, it always takes longer to get it back than to lose it, because it's more percent. Yeah, I mean, you can't gain, if you lose 0.5%, you can't such gain 0.5% and have the same back, because 0.5% from the balance, if you lost it, is not equally to the 0.5% you really lost. I mean, the one you have to generate again to kind of realize it.
Yeah, but I calculate a difference. If I see a pullback, if I trade into a pullback, then for me that is already considered a loss. Even if it's equity, that doesn't really matter. Like, best example is you are plus 90 in your trade, and your target is 110. Let's just put it that way. And then you had a 10 pip stop, you are plus 90. That means you are 90 pips up on a 10 pip stop. That is a 1 to 9 risk to reward. And then the market starts to act strangely. So you know there's gonna be a pullback. And then you have to ask yourself, do you want to risk 100 pips because your stop is still at minus 10? So you're risking at this point 100 pips to make 20. And then the typical educators say, this is not a real risk, this is just how the market works, but this is actually risk. Do you want this 110 or this 120? Okay, if it's 120, it's 30 pips. But at this point, how the market behaves, you see there is a consolidation phase, the volume is dying down, so there will be a pullback, and then, but at this point, in the moment you realize that it is happening, you essentially risking 100 pips to make 30.
So you're breaking your set of rules, the rigid set of rules about taking profit at a certain level based on experience and recognizing the pattern that's unfolding in front of you. Yeah.
Yes, exactly. And this is what makes you a successful trader. And a machine will, yeah, okay, a AI-driven machine may notice that too, but we're talking about dumb machines that running on MetaTrader.
Mm-hmm.
Yeah, I think it's about knowing. Obviously, most of the time, I saw a post. It was something. It was yeah, it was saying, you know, follow the rules all the time, but then know when to break the rules. I think that's
yeah, exactly.
I know exactly what you mean. Yeah, I know exactly what you mean when you say that.
But most people don't grasp that. I say this is I just say Dante made a good example. You just go to the person, stop the person out of the trade, and then you say, "I just get back in." With the same stop loss and the same take profit, and then the people will think different, because then they think, why the fuck should I risk 110 pips to make 20? But this is exactly the same situation. The only difference is, before it was equity, and now it's account balance.
Yeah, no, I know exactly what you mean. Yeah.
Do you think you only really learn that from practicing it wrongly in the early stages of your trading development? That you have to get hurt by moving your stop loss early, not giving the market room to breathe, and that repetition of failure is the only way you learn it?
No, I don't.
Is there any way to learn it? Did you ask if there's any way to learn?
Just when to compromise your rules on taking profit.
I guess also it's a feeling. It's a lot feeling, I guess.
Yeah, I'm taking that wrong many times actually. I always exit early. But I have situations where I exit right to the pip on the top, and then my entire trade goes really badly to shit. And then I think, okay, I took profit just because of this doesn't look very good anymore, and then price drops really massively on me, putting me in a massive loss if I would had hold on it. But on other situations, I do the same. I exit early because I don't like how the market reacts, and then it just recovers and goes straight into my take profit. So it's always, you have to do the number crunching. You have to record when did you did exit early, why did you exit early, and did the target what's the target reached anyway?
That makes sense.
And at how much drawdown? I mean, equity drawdown from the moment you wanted to exit. That's what I said before about equity and balance must be the same at the moment you're making this decision. Most people have a different idea about equity and balance. So like they're in the trade, they're plus 50 or whatever, and then this is a free trade. This is just bullshit. There is no such thing as a free trade. Because if you let it go and you say, okay, it's a free trade, I set my stop to break even. Yeah, good, and you stopped out at break even, but you wasted 2 hours of your life.
Yeah, no, definitely. I'm a massive believer in everything. Every single thing you do has an opportunity cost, especially in trading. Yeah, if it's not gaining, then you're missing out on potential profits. Or, yeah, definitely.
That's why I'm usually not move stops. I move stops, but based on the level I scale in. Like if I see, okay, that this is gonna blow in like right now, then I'm loading up. But this automatically means my stop will be a lot higher than it was before, because I stop based on my drawdown and not based on the distance. But this is just how I trade.
Yeah, I do stops on drawdown as well. Yeah, no. If the stop's further away, just trade smaller. If stops really close, you can pile on the size.
Yeah, exactly. I do the same. I calculate the size of the trade with where my stop's supposed to be, and I put in as much as I can in this range between the entry and the stop. But let's say we price goes up, price goes into my favor, and then there's a small pullback, and I see that okay, there is some really high volume building, but the price not pulling back very much. That usually means that it's gonna explode, and then I'm loading up. But essentially, that would be means that I will also be stopped out earlier because of the scaling in. I cannot hold the stop level anymore. If I would hold it, I would just take on more risk. So I make the decision. If I make the decision to scale in, that means for me, I will not allow the price to go back. If it goes back, then that's it. End of story. So this is like a compromise to the free trade ideology. So I don't make a free trade. I just scale in because this is gonna work, and so if it works, can load up, and if it doesn't, like my idea was wrong, and there is really a pullback, then I will be stopped out because I have too much size on. And this are the stuff that makes you a good trader, and this is also the stuff a machine cannot do. Because you need to have the feeling for how things are moving. You have to see that, and I don't think a machine can do that.
Well, a machine can only really see patterns, but they can't read sort of market psychology, or they can't. You know, at the end of the day, yeah, you're right. You know, it's glorified psychology, isn't it? Really.
Yeah, sure.
And a human machine can only see certain patterns or prices, but it can't actually interact with where the money's flowing, what's actually going on. And at the end of the day, some decisions have to be made that are purely kind of not emotional, but based on not feeling. But yeah, I know what you mean.
Pattern recognition.
Yeah, I mean, a machine can recognize patterns, but a machine can't sort of interact with. Obviously, a machine's very linear, and you do have to act like a machine in many ways of trading. But there's some things a machine can't do, I think.
Pattern recognition is a very good example, actually, because a pattern recognizing a pattern in Python is really easy to do. I mean, on the programming side, but if you see how the pattern is built, like if it's take a minute to create the pattern, then you're gonna react different than if it's take whatever half a day for the pattern to evolve. Okay, this could be programmed too, but there is still some intuition going on. Like you see, there's some activities going on. We are on a key level or something like that, and the price drops really hard to it. It bounces back really hard, and then it falls back to the key level, and building the double bottom as example.
And a machine may not be able to use that intuition. Yeah.
And that's the point where you really load up, because you know there is a massive amount of buyers, and they're just fighting at this very moment. That's actually what creates the double bottom. But if it's like happening like instantly, then that's where you put on a lot more size than if it's just something that builds over a very long time.
Yeah, I know.
But if it's not on a key level, then it can be just a normal pullback. And at the moment, the price is back at 100%. It looks like a double bottom, but it may be just a pullback. And you as a human can more or less see that. Okay, with the state-of-the-art AI, they can probably do that too. But then we are retail traders. We don't have $100 million to have space on our AI system.
Soon. Maybe just apply a dumb AI on a higher time frame.
Yeah, right. And then these things matter less. If it's take 3 days to develop a Head and Shoulders or something like that, then this is something very, very easy. And you can still double check it because there's a lot of time in between it's being built. Plus the sizing is not so big, so and the size and range is a lot. Size is smaller, range is larger, so there's a lot of time to interact and say this is not gonna work. This just drop it. I keep saying you have to step in front of the train.
You only can do that if you hedge. That's the point.
No, that's wrong. That's absolutely wrong. If you like see a price is falling very hard, like take the VWAP as example. You trade the VWAP too, so you know that price is falling really hard to the VWAP. This is where you press the buy button and you keep pressing it.
It's just crazy to me, but yeah, okay.
You literally stepping in front of the train because you know it's gonna stop there. And if it doesn't...
No, actually it's not that...
If it doesn't, that's where you have to have your things in place where you A being stopped out or B being hedged. But look at the chart. How many times does it work and how many times it doesn't? If you get overrun by this train because you saw a price, it comes to you and you're just standing there and take it. And if you get overrun, yeah, so be it. I'm on a 25 tick chart now on Euro USD for the sake of the live stream, and there is 1, 2, 3, 4, 5 reversals in the last 5 minutes. And if I had take them all, then yeah, they all works perfectly. I can post you a chart. This is a 25 tick chart.
Right, let's have a look. I wanna see this actually.
Just checking it out. Yeah.
I'm a massive fan of the VWAP as well. Actually, I just want to say. I mean, I think it's quite a good tool. One of the few sort of indicators in brackets I'd use.
You see it?
Yeah, no, I see it. Yeah, definitely. Yeah, if you loaded up on that when it was going up to the VWAP there, I'm assuming the yellow dotted line is the VWAP. Yeah, if you'd loaded up, sort of scaling at the bottom of that candle on the right there, yeah, loaded up, gone to the VWAP, or even just sold at the VWAP, and then gone.
Yeah, but you have to step in front of it. You have to press the button, or you have to have a limit order there.
Look at that, twice it stops absolutely dead on the VWAP. Whereas literally on the top left though, you can see that it sort of hit the VWAP, but then it kind of, well, I wouldn't trade that top bit anyway, but yeah, there are many times where it literally right on the dot stops on the VWAP, reverses at the VWAP. There are times though that it sort of like goes just a little bit through, and it'll go maybe like literally just 1 or 2 pips over the VWAP and then come back over. That's a very annoying situation because you don't really know what it's going to do. You don't know whether it's committing to it or not, and then it'll come back or.
Let's see the next time it's happening.
Actually, that would be interesting to check out.
And as I said, this is a 25 tick chart. I just put it up that there is something on the screen. I don't trade that. I never trade a 25 tick chart. But this is just about. This is just a good example of Stepping in front of the train.
I think there's a fine line there between stepping in front of the train and then just sort of being, you know, you've got to make sure you've got your risk management in check. And
yeah, sure. This is all about probabilities.
It's calculated stepping in front of the train.
yeah, exactly. But this 1, 2, 3 reversals, they were between minute 27 and minute 04 in 30 minutes. There were 3 reversals.
I don't think I can get the VWAP on the 25 tick chart, actually. Do you have to adjust?
It takes time. That thing have to paint.
Yeah, it doesn't on the tick chart. It doesn't reset. Okay. The problem is I cannot get the opening time. You would need to scroll back to the moment where the market opened, and this will take like forever on a tick chart. That's why the VWAP resets on the moment you load the chart. So you have to let it run for a while.
Okay, as I said, I don't trade tick charts, so like 25 tick, yeah. So yeah, that's fine.
I mean, and now is a dead time. Like, load a 25 tick chart like on the London opening or something like that, and the cow is flying.
Oh yeah, I bet, yeah. No, I'm a massive I trade the London Open as one of my main strategies, actually. Obviously it's quite handy for me being in the UK. It's a perfect time to really wake up and do it. But you know, one of my main strategies that sort of gets me about 1% a day is directly involving trading the London Open and getting on board that kind of massive sort of quick momentum that you get with the London Open and sort of establishing that direction at the beginning of the day. And then yeah. Just a question actually with a VWAP. There are there 2 ways you can sort of trade the VWAP. You can do like reversals back to the VWAP or from the VWAP or bouncing off it, but then can't you trade it sort of where it goes through the VWAP?
Slow. The problem is the reversals are always slow.
Yeah, but can't you trade it so that like when it hits the VWAP, it will cross the VWAP and then go through? Or is there only just reversals to and from the VWAP?
No, some of my friends, they actually do that. They trade only towards the VWAP. They don't trade like I do it. Because I just prey on the momentum.
Right, well, so they trade through the VWAP, so the price will just, because sometimes it just shoots through the VWAP. But you trade the reversal off the VWAP.
Yes, I only trade the reversals, but some of my friends, they do exactly that.
Okay. Yeah, as I said, I thought there was
reversals functioning really good if you know you have some support somewhere. And we did definitely double bottom the support, and this will shoot up. So you know the next possible target will be VWAP.
Yeah, okay.
Yeah, especially if it's counter trend. If it's counter trend, the VWAP is the best target.
Okay, well, so yeah, counter trend, yeah.
Because then on the VWAP, a bank will come in and just shoot it back. And then on trading view, you're gonna see all the people. They just hunt my stop.
Yeah. No, I love the VWAP, to be honest. It's a great little indicator or tool, or yeah.
Yeah, and it delivers you information that is actually not there. This is information you cannot see on the price development.
Well, yeah, it's just. I mean, it's also, I guess this is kind of what you do. Is obviously if you buy below the VWAP, you know that you're getting a below average price. Because that is essentially what the VWAP is, isn't it? It's the average price accounting for volume and things. So if you
the price at that moment of the day, you can possibly reach. That's why it's functioning so good, because of there's big money kind of jumping in. Otherwise, the market wouldn't move like this, you know.
Yeah.
At like a couple of billion, I guess you can't put that all on one trade. You have to kind of set this into multiple trades. And that's why price always kind of going up in some way. And in some way, if it hits these average, then people and institutions, probably also bots or whatever, kind of trying to get in. So and that makes it actually work. That gives you security too, by my feeling.
Well, yeah, trade where the big money's going.
Yeah, we are all scalpers anyway. I keep saying we are all we like surfers. We just hang ourselves on a pickup truck and ride along. And this is what we're basically all doing. All retailers do that. We don't move the markets. I mean, we do, but not in that sense. Like you press the button and the price falls.
Yeah,
If 100 million retail traders press the button, then the price falls, of course. But yeah, this is again in mass psychology. Whole different ball game. So better tag along with somebody who plays big.
Damn, look at that CAD go. How many people is that ripping off? Is it just about to take out the previous high on the hourly?
Oh yeah, no, I was watching CAD only 20 minutes ago. In fact, well, 10 minutes ago. It looks like it's going to blow because it's, yeah, oh yeah, no, it actually did. Well, look at that. Yeah, I was literally watching that about 10 minutes ago thinking that's going to blow. I didn't know which direction it was going to go, but yeah.
It's such a dirty bitch that it looks like it's a reversal. It's so close. Dips down below the range.
What the fuck did happen there? What is this news, right?
Is it news? Yeah, okay. No, I was literally looking at that 10 minutes ago thinking that's going to blow. Because it was just, yeah. It'd been at that price range, just in between that range for so long. I didn't know which way I was going to go there. I wouldn't have traded it either, but yeah.
Nice, it's almost got the top. I still long US dollar CAD.
Really?
But on my swing trader account, I'm not day trading anymore.
So what do you reckon then? Is it going to go 2 pips above that previous high at 133.759 and then turn around again for a full-on crash?
Yeah, I was just thinking that. I don't know. I'm not a massive fan of USD CAD, to be honest. But I'm just sending a picture. I'll send it on the hodlmybeer thing about the VWAP actually.
Cool.
Now you look at that. That is really nice.
Because on this picture here, you can see that it's not really respecting the VWAP. So Swingfish, if you sort of use your maybe reversal, actually to be fair, your reversal technique would work because you could see that when it was going far away from the VWAP, it always returns back to the VWAP. Is that sort of one way you could trade it as well?
Yeah. That's what I meant before. So there are some people doing that.
Those peaks there on the top there, those tops there, or especially on the second one, you've seen, well, it reversed there on the second one. It reversed there before. So, and then let's target the VWAP. So I'd have gone short at that top bit there where I saw a bit of resistance and targeted the VWAP for a nice, not many pips, but yeah.
What time? This is quite a big time frame, right?
Yeah, no, I think it's 4 hours actually. So yeah, that would have been decent. Yeah. This is yeah, no, it's 30 minutes. 30-minute time frame. It's,
that's too big.
The Nikkei. It's the Nikkei.
Yeah, that's too big. You don't see the reversals.
Oh, really? What time frame do you use for the VWAP? Because I normally use about sort of 15 minutes to 30 minutes for VWAP trading, but do you use lower than that then?
I would go lower to just for the entries.
What's that, like 7 minutes?
Even 3. I trade mostly on 3 minutes.
Oh, really? Okay.
Because sometimes the reversals happen almost instantly. Especially if on the crosses, like the price crosses like 3 pips, and then it's gonna pull back in the same candle and make the reversal in the same candle. If you use like anything larger than like 7-minute or 10-minute candles, you're not gonna see the reversal because it's happening in the same candle.
Okay.
And if you have a 3-minute chart, you're gonna see there is an actual reversal happening, and then you trade the intraday trend change. What was that? Your chart? What pair was that?
the one I just put up.
Yeah.
That wasn't a pair. That was just the Nikkei, the Japan.
Okay, that's fine. Whatever,
Yeah.
it works on everything.
It was just an example. That wasn't really when I was trading, but yeah. Actually, yeah, I'm looking on 3 minute now, and I can see the VWAP is more helpful at this time frame. It's kind of, yeah, I know what you mean about it being within that one candle. I can see what you mean. But yeah. God, yeah, USD CAD is it's coming up to that high there, isn't it? It'll be interesting to see what it does.
Yeah, this is also on the Nikkei. You can see what I meant with the VWAP reversal. Price breaks through south, and then it's gonna come back to the VWAP. And then you just short it from there.
Yeah, no, I see what you mean. What on the where it goes? You'd short it where it bounces off the VWAP and then continues short.
Yeah, the chart. If the chart is like the one I just posted. Okay, wait. Let me make another picture. Okay, it's the same. It's the same chart. I just cut a piece of it out. All right.
Yeah, got it.
If it's like this on the first touch of the VWAP, I will buy it.
Yeah.
Because this is a buy. The VWAP is bending slightly up, and so we are.
Oh yeah, the first one, and it does bounce, doesn't it? But it doesn't really bounce very much higher. Yeah. Okay.
Yeah, but this will be a failed VWAP reversal for me, and that's why I do hedging.
Yeah.
Because the price breaks through, I will get hedged in my position immediately, because I'm always use too much size. And I mean, on trades like this, I have my robot hedges me at 0.65%, and I make sure I have this loss shortly after.
Yeah.
So I will be hedged very quickly, and then I don't do anything. Price.
Yeah.
But then the retest happens, and this is already my next entry for the short. This is where I will just exit the buy trade with a small loss, because also this is almost the same level as my entry for the buy trade.
Yeah. So then you pile on a bit more size on the short side, and then write it down. Yeah.
Yeah.
What is that? 3 minute? Or is that 7 minute?
That's 3 minute.
That's 3 minute. Yeah. Yeah, no, I see that. That's good. Yeah.
Okay, if you get whipsawed, then yeah, this can be expensive.
Well, yeah, by the time you paid your commissions and yeah. See, I find also hedging to be more. Obviously, the cost of trading is a bit more when you hedge, because you have to be paying that commission, and yeah.
Like in situations like that is very bad.
Yeah, that would be expensive. Yeah, no,
that would be an expensive setup.
yeah, that would be expensive. Yeah, no, you be whips doing all over the place there, aren't you?
But again, this is exactly the point where we are, as human, have a massive advantage, because if you look at that on a bigger scale.
Mm. Yeah, if you put that on a because that's a 3 minute, but
yeah, this is still 3 minute, but this is like what 100 candles.
Yeah.
So it's pretty clear you won't take this buy setup at all. You're just being stopped out on the sell, but the sell trade was over already anyway.
Yeah, no, I can see that. Yeah, because you'd have gone.
Because you just trade to the next support or resistance, and this were a successful short trade, but you would not take the long position at this point, because the market structure is not really advertising a buy position.
No, yeah, because of course the VWAP bending downwards, and then where would have you gone long on the first time there when it. See, I wouldn't have gone.
I would have taken that one. The one I showed in the first one, which is a failure.
That's the one you'd have taken it long. Yeah, that's where I'd have taken it long.
Yeah, I would have taken that for sure.
I may have taken it long earlier when it goes. The VWAP starts to bend upwards again, and we see some slightly smaller, higher highs forming. I'd have probably.
Oh I maybe would have taken that one too. Yeah.
Yeah.
And that will be a. Oh, maybe let me just make a trend line. And now I'm curious.
I'm just looking at it there. That's probably where I may have gone long in the highs. It's very easy to say in retrospect, oh yeah, I've gone long there, but would you really have? Actually, it's not. Yeah. But I'd have seen the sort of I'd have drawn a small trend line under those sort of much smaller higher highs, and I'd have probably seen it bounce off the trend line and then go through the VWAP and thought, yeah, let's hop in long maybe.
Yeah, but it broke 120 down, and the trend line will be hit at 372. Okay, this would work, yeah. Let me just make another photo.
I mean, USD CAD could be quite a nice low risk short at this point. I'm just looking at it. Yeah, just because obviously it's quite low risk if it obviously goes above that high, which did it go above that high?
Probably it did. Just a couple of pips.
Just by a couple of pips there, yeah. So I'm right now. I'm not going to take the trade, but if I'm just looking at this, I'd be inclined to go short, whack my stop loss maybe a couple of pips above the high it just made, and then probably target maybe. I don't even know, to be honest.
1.33162, maybe the top of the range before.
Yeah, I'd say I'd probably target 1.333, something like that. Maybe for. Yeah.
I mean, this US dollar CAD trade like forever already. When did I enter this trade? April 9. And I scaled in April 18, and this trade I have 804 pips now. Okay, this is really a US dollar CAD is really an example. Like, this is how you swing trade, but usually they don't go like this.
Wait, when did you get in? Did you get in long? On what, April? Let me have a look. When did you get in? Oh yeah.
I cannot display that on our hourly chart. Unbelievable.
Oh no, I can see. Yeah, no, that's a good swing trade actually. Yeah, if you got in anywhere in April, really.
That's a good trade. But this is just not my style.
What, the short right now? Possibly.
I know this could all be bullshit, but switching to the 1 minute chart, watching it approach that previous high, admittedly it did go 10 pips over, but then look for what we got, a harami and then a bearish engulfing candle on the 1 minute. Just an idea.
What are you saying, that backs up a potential short position?
Just as an entry point for the short against a big flipping news generated move up to the previous high, watching the 1 minute then for any kind of hesitation or change of trend with, unreliable candle patterns normally on the 1 minute.
I mean, what we could have now is, obviously, if this is news generated, we could see, obviously, naturally, if it is news, I don't know what the news was, what even was the news, but potentially we could see, obviously, this kind of bullish momentum as a result of the news, and then it just bounced off the previous high because obviously a lot of stops are going to, or a lot of sort of sell orders might be located there, but actually we might see it just continue up through that high later on, because actually if the news might be indicating sort of underlying fundamentals, but might be sort of pushing more towards a long position, and this might just be kind of like a retest off the high. I'm not sure. As I say, I don't know. I haven't been looking at USD CAD. I haven't been trading. I don't know what the news was, so I'm not really in a position to say. But I'm just throwing out ideas, really.
It's on the trend line, so there is a high probability that it's gonna drop.
Yeah. No. What with the previous high of the high on the 22nd?
And this is the second swing, so the second wave. So it's probably gonna go. Oh, my stop is actually quite bad. If this swings down, then I'm gonna get stopped out. Ah, whatever. That's why I hate swing trading. This chart is actually a very good example. See, if it's now gonna make another wave, it's gonna get all the way up, almost to my first entry, giving back like 600 pips.
Oh yeah, your stop loss. Well, what time frame is that chart?
That's daily.
Oh, that's daily. Oh yeah, because of course it could hit. Nah, you're right actually. Yeah.
And that's why I don't like swing trading, because
no, that's a perfect example. That's a perfect example actually. Yeah. That is a perfect example.
You're keeping in mind the structure, yeah, of previous highs, and got to keep your stop below it. Is that right?
Yeah, the stop has to be below. If I let it run, but that's what I don't like about now. I'm 800 pips plus, but if the wave continues, if the wave goes down, and would be normal, I will return 600 pips for the wave to complete.
Which goes against what you said earlier about kind of giving up 10 pips and taking profit early, as opposed to risking 90 pips to make 10.
Yeah, that's exactly the point. But because you see that the take profit is above, but it's gonna take another wave to get there.
Yeah, as I say, to me, just it could go all the way down and say price moves in waves. You could come down and hit your stop loss there, couldn't you?
Yeah, if it goes down, I probably move the stop back to somewhere below the trend line.
Yeah, because the likelihood is it will bounce off that purple. Well, it could bounce off that purple trend line of yours there. Yeah, and then continue the wave up. But
yeah, exactly. It's gonna make this. It's gonna make the third wave and hit the take profit.
Yeah, and I'm looking at your entry points there. Yeah, I mean you wouldn't lose, as I say, even if it goes down to that purple trend line, and it does go down through that trend line for some reason, you won't have actually lost any money. You'll probably just sort of break even, maybe, if you account for swap and stuff.
Yeah, sure, but that's exactly the point, because
about swing trading, because you had all those pips in the green, and then because the price moves in waves, you haven't actually, and you've wasted all that time as well.
Yeah, exactly, because I'm 2 months in this trade already.
Yeah.
Oh no, that's not right. 1 month.
1 month, yeah, April. As I say, if just looking at this chart, I'm not trading this, or I'm not knowledgeable about this, but I'd be inclined to go do a fairly low risk sort of short position right now to try and catch that swing back down. But yeah, I'm not gonna. It's not what I'm doing. I'm not really knowledgeable about it. I say, what even was the news, to be honest? What was it? I'm having a look now. Actually,
I saw in the chat that Hermes did post some news. Governor speech, no news, just blah blah.
Oh right, okay.
So this CAD spike that we've had, do we now feel the ripple effect of that across other dollar pairs?
Depends if the move was between dollar. If the move was because of dollar or because of CAD.
So if it's CAD driven,
if it's CAD driven,
dollar, do we now see like an after effect of that? Maybe changing sentiment on the dollar, or because I'm seeing like the possibilities that dollar yen's going to make a push.
I mean, if it's CAD driven, I'm not sure particularly. If it's because the CAD is rising in strength, then I wouldn't expect that to necessarily push the dollar down. Because say if I was trading cable, for example, that wouldn't really have an effect on it, would it? Really, unless there was some kind of behind the scenes economic link, as I say, that we can't really predict or know about. But yeah, just from my experience, I would just say I don't have any experience, but I would just from logics know that if it was CAD driven, I don't see how it would affect a pair like say pound dollar or dollar yen or something, unless money was flowing significantly from the dollar to the CAD. But yeah,
I get what you're saying about
which
currencies in control, and
it's about it's sort of where's the money flowing really, and if money's flowing from dollar into CAD, then that might push down other dollar pairs. But if the money is flowing from saying just into CAD, that's just my Swingfish. You probably have a better understanding of this than me, but that's just my probably not explaining it very well either.
Sorry guys, I just took my night pill, but I didn't sleep because it didn't take my effect. It didn't take effect.
What's up, guys?
Hello.
Fish, can I ask you something? Actually, Sam put me to ask you if the indicator of VWAP on MT4 does work without expiry data. Does it?
What do you mean?
Well, expiry data. When a certain expert or indicator has an expiry in its code, does it have?
I don't know what you mean.
That's not what I meant. I was asking if you know the two messages you pinned. One of them is the VWAP. The other one is the Swingfish helper. Both of them have the same link. They're both for the helper. The VWAP link is not there.
Oh yeah. I replaced the VWAP with the Swingfish Intra, which shows the volume and the position sizes as well.
This is the part of the code I want to show you, but I don't get what. Yeah, that's it. The expert has expired until the certain day. That certain day.
Why should it expire?
I just asked you if it expires because I'm concerned about it, about the indicator.
No.
Where did you see that?
Where? It's in my own expert.
Oh, I haven't checked. I mean, do you still have the link for the VWAP that I posted? Did you download it?
Yeah, I downloaded and saved into my computer in case anything has troubles with my trading. I just use the VWAP to confirm my price action trade.
I'm not sure. Let me turn my laptop on and check because I'm not at home right now.
Thank you.
Hopefully it connects to the internet. Let's see.
So, Daniel, you're having troubles with the indicator on MT4?
Yeah,
right?
Exactly.
Okay. Maybe put it in chat or, let the other guys talk about other stuff just for a little while.
I'm sorry.
Well, the indicator has no expiry, if you mean that, but it has an update notification.
Okay.
Well, the newer versions have. But there is no requirement to do that. You just have a text then on the screen that there's a new version.
Yeah, I get it. Thank you. I'm sorry for interrupting you. You can go and just continue your discussion because, yeah.
Thank you. Okay, it feels like I've killed the mood in the room now. Nice one, Octo. The question was, right? No, that's before I forget. Right, so somebody said to me that oil is linked very closely to dollar CAD, and dollar CAD fucks me every single time when I think of correlations between it and other dollar pairs. Tell me what you know.
I would just say that USD CAD is a massive commodity pair. So I don't know anything about this. All I know is that there will be a correlation because obviously Canada relies heavily on oil as one of its exports, or the USD CAD pair is a very commodity related pair. So what oil's doing will definitely affect the price of dollar CAD. I don't know how, but Swingfish, you're more qualified, I think. But
I'm not so much into fundamentals.
Okay. So question then. So if the CAD is a pushing force behind a move in the markets, does that depreciate the price of oil in any way? Or is it tiny in comparison?
That's a good question.
So I'm thinking, does Canada export tons and tons of oil compared to everybody else? So when the CAD is a boost, it affects the price of oil or not?
Yeah, technically it does, because you have to pay a higher price in your own currency. But it doesn't affect the price itself.
Hi everyone. Hello, Captain.
Oh, hey.
Hello.
Thanks, trade.
He was spying on us all the time.
No, I'm not all the time. I just came up. You know,
writing down all the trade secrets.
Oh, shit. What's the trade today?
Ducks.
You guys discussing about coding or something here? Somebody just pulled the codes here?
All sorts of shit.
Yeah, some strategy to be converted to be in a machine.
Oh, automation.
Yeah.
Sure. I've got a strategy that I really want to automate, and I've been sort of meaning to get around to automating it about 6 months now, but just don't really know how or have the technical knowledge.
Is it indicator based, Kano?
Nah, it's price action.
Oh, great. So therefore, it's no time frame dependent.
No, it is time frame dependent. Yeah.
Like my expert.
I don't know what your expert is, but
I can share it.
Yeah.
Yeah, but not in a trading room in hodlmybeer.
Okay.
Yeah, doing hodlmybeer.
Where should I post it?
Well, I don't know. I don't know. Hijack the old conversation here, but what actually is your expert? Because it might not be relevant at all. Actually, but I don't know.
Okay.
Because the strategy I have, literally, it's a time frame. It has to be on a certain time frame, but it doesn't matter necessarily. It's more like a certain time of day. So I don't know if that's what your expert.
Yeah, then the time frame doesn't matter. If you're not after the candles, if the candles don't matter, just the pricing information, then the time frame is not relevant. Doesn't matter.
Exactly.
Okay, yeah, it's the price over a specific period of time. So I guess that is, it's not, yeah.
Yeah, okay, then it's like if you do it on MetaTrader, then it's a lot more easy to run it on a certain time frame, and then you can just use the closing prices to make your to trigger or not. Like,
it's like a box breakout strategy basically. So it takes the high and the low of a 3-hour period, and then sets buy or sell orders above and below them.
Oh yeah, I have that too. I did that too for quite some time actually. I have an indicator for that actually makes this box.
Really? Okay.
So And so I can see how the box is developing, and I'm just moving the pending orders along with it. I did that for quite some time, actually. But I did it for 1.5 hours on the exchange opening.
Yeah,
so like,
it's always on the open, yeah.
Yeah, I mean, like so London opens, and then the box.
Yeah, London.
The box is building, and then after 1 hour, you just put the orders there, and that's it.
Yeah, no, I did on the London Open, yeah. On the London Open, look at the 4, 5, and 6 a.m. candles, GMT time, high and low, place pending orders above the high and below the low. Actually, is a very good strategy that generates, on average, probably about 1% a day.
Dude, I'm just I
did combine that with RSI. Let me just check on that. Maybe I still have it.
Oh yeah, and if you combine it with a bit of VWAP and RSI, it's I haven't done that. But have you got an actual automated program for that Swingfish?
No, I just have an indicator who does that.
Okay. Have you got it for download or?
I have to find it first.
Okay.
Because I haven't used it in years.
Right. To be honest, the only reason I want to automate it is because if I can avoid waking up at 7 a.m. GMT and it just do it for me, then obviously that's ideal.
Yeah, but making the indicator to be a machine and placing the orders, that's really easy. You just wait for the time and you have the indicator information already. You just take the top line and the bottom line, place an order, that's it.
Well, I mean, yeah, as I say, I do that manually, but I guess an indicator would save me a little bit of time.
Yeah, that's what I meant. Automating that is really easy.
Yeah. It's just I want to automate the actual setting of the pending order and the execution of it so that I don't have to be awake to actually do it. So, like, it will set the box for me, put in the pending orders for me, and then it will execute accordingly.
If you don't mind me asking,
yeah.
When it comes to your trading stops or taking profit, what kind of, how you set your stop loss on the pending order? Is it a fixed amount or below the range?
So it's always range based basically. So, I mean, so it will be at a certain point. I never use trading stops ever really in my trading, but for this particular strategy, it's based on. So I'll take the high and the low of that period, and there'll be there's a very strict set of rules. So if it will go, say, it's very hard to sort of explain without actually showing you, but if it goes, so say if a buy order is triggered basically by one of the pending orders, so a buy order is triggered, or it's actually a buy stop, and that'll be triggered. If the price then reverses back down and goes back down through where the sell stop was, i.e. at the bottom of the range, that will be a trigger to stop loss out of my buy order, my buy stop, and vice versa. So if a sell stop was triggered at the bottom of the range, the price went down for a little bit, but then reversed back up to go to the top of the range. The stop for that one would be where the buy stop is located. If you see what I mean, that's hard to explain without showing you.
No, that's crystal clear. I get it.
Yeah.
I get the principle.
Yeah.
You haven't by any chance put a YouTube video out explaining the strategy in the past, have you?
No. It is quite commonly known online, but I haven't put a YouTube strategy, YouTube video out. No.
Yeah, check the screenshots I just posted.
It's a very well-known strategy. I think it's actually called like. There's variation. Yeah. I mean, there's variations on it. I sort of have my own little variation, but the basic principle is a very widely circulated strategy. But I just wanted to see if I could automate it because it has actually been profitable. So, in the way I do it, at least.
Excellent.
A lot of people online do it slightly differently to I do, but they'll try and sell you a course that says, yeah, this will make you fuck tons of money, but yeah, thanks, Wingfish. There, I see that.
It's basically doing this, and I have some alerts putting in, like now it shows breaking out downwards because it's breaking out of the box. So I actually made that already. All we need to do is make a machine out of it, and if this alert happens breaking out, that would mean we shorting.
And I got you, yeah.
But the code is basically there already. We just have to convert the indicator to be a machine and placing actually the orders.
Okay.
I think I can do that.
So does it form the box then? So
yeah, the box is built by a number of candles, which I can just change in the code. Like you say you're checking the price action for 6 hours, and we just take 6 candles, or we take 12 candles, and you use it on the 30-minute chart, or 24, or the 15-minute chart, or whatever. And then, and if that is given, then we just place the orders. I mean, if the price is in the box, then we place the orders, and if the price is breaking out on the last candle, like it does right now, then we just place a market order. This would be really easy to make a algo just that.
Yeah, because I was going to say, I obviously follow, so the order has to be placed. The pending order has to be taken place after 7 a.m. If it breaks out, you have to move the order up. Basically, so that the order. So if an order is triggered before 7 a.m., it's invalid. It doesn't work. So you have to wait. But if the code is there, I mean, I don't know if you can send me sort of the code. I can have a look at it. I can maybe modify it to my strategy.
Yeah, sure. You just.
I don't know if that's going to be easy for you. Yeah.
Because this is what it does actually already. It just doesn't place the orders. You just have to save it as a algo, as a bot, and then you can just execute the order instead of having on the top left corner showing breaking out.
Yeah, but I mean, could you get it to execute the orders as well, though?
Yeah. You just have to classify it as a robot, and then it can place orders.
Okay. Yeah. If you could, if somebody could do that, hassle, if you could send me the code, that'd be quite handy.
Yeah, sure, I can do that.
Nice one, thanks.
Fish, what about my code? What needs of my code?
I also have a box called like Asian box. I use sometimes, but then I drop it. I'm not so patient with that.
Oh yeah, I'm just going that Asian box, yeah.
You're lucky. This is native code. I thought this was from MetaTrader.
Yeah, this is MT4.
Oh yeah, it is shit.
I know you hate it.
This is converted from MT4.
Okay, so will it work on CTrader?
Yeah, it runs on CTrader. I converted it. So there's a lot of shit code. Yeah, there's a lot of shit code that is only for the conversion.
Right, okay.
But actually execution is pretty straightforward.
Right, okay.
Like it's calculating the box and the highs and lows. It just make an array with the last 12 prices and then putting them together. On native C algo, you just make a market data series. But right. MetaTrader cannot do that. That's why the code looks a little bit ugly. But you get the idea what it is doing, so I can send it to you. Then.
But honestly, if you base on the box, I don't know how did you do the statistic on that. But I did for all 12 pairs, 6 of yen pairs, and also 6 of US dollar pairs. And I found it very unstable result.
What do you mean?
I mean that if I run for a whole years actually, and I base on the box. I mean, I use my box is another type box, Asian box, right? And like you say, you buy stop and sell stop above and below that. And for the win part and minus the losing parts, I really not coming out as the positive over the long run.
Oh, yeah, this is an indicator, so the box moves along with the price. If you do that with an algo, you just set a price where the box starts, and then we have whatever. I will do it on a 15-minute chart and have 24 candles. Then you have your 6 hours. And then just execute or place the orders based on the rules. This indicator moves along all the time with the box.
I know. That's more or less like near NR 4, 5, 6, 7, whatever. So narrow range type of narrow range pattern, right?
Yeah.
So you take a break out of the narrow range, and you base on the number of candle, whatever you want it, on whatever time frame you like it.
Yeah, exactly.
4,
It's
5, 6,
unrelated
7.
to anything.
Somebody took it like 7, somebody named it like 4, 3, 5, and 8, whatever. To be honest, it's win sometimes, losing sometimes, and not very stable enough, in my opinion. And if for other people experience that, for me, I give up after some time, actually.
Yeah, but yeah, that's why I don't use it, because it was nice in the beginning to have it as information, but as a breakout strategy, as an opening breakout strategy, this is actually a good idea, because you're using the first whatever number of candles to find out a sediment, and this is what this box actually doing. You see there is a small box on the end. At the moment this is where the VWAP is, but this is just accidentally, this is coincidentally. So you actually can see the sediment more or less, because the gray box is in the middle, and if the range below is larger, then there is more downforce than upwards force, whatever. But you are right. Doing it like the indicator does, it makes little sense.
No, I mean, if you simply base on that strategies alone, and as you know that this becomes so popular, everybody when start they use this, and at first it look very sexy because it seems like it's working, but to be honest, majority of people use this one, they will go down the road.
Yeah, then it will not work anymore, because somebody with a lot of money gonna make a machine who trades against that.
Exactly, it's kind of turtle soup.
Yeah.
Turtle soup, whatever. I mean, instead of like 20, 25, 26, 7 days or weeks range, now they narrow to 4, 5, 6, 7 candles range. The same concept, but they trade again that instead of with that.
Everyone's so silent here.
Maybe. So to be honest, I tend to look on the other side of this kind of popular strategy. I like to take the other side instead.
So how about a bot that looks for a narrow range of candles and a breakout to the upside, then places the pending order underneath to kind of catch the fake out?
Yeah, that's the purpose of the box, to avoid this fake out. So you're accumulating a range, you're setting a range, and if it, so like, I will not do it for 6 hours. I did it in the past for 1 hour. So if
I think I did mention in this forum once. I say I tend to do something in opposite. So let's say right now we discussed about narrow range. We don't discuss about small range made by number of candles. Let's say even you go down to 1 candle, and you take the candle which is very small range, even like pin bar or doji, this kind of candle pattern or candle. It's supposed to be very narrow range, and then if it's happened in the way that a lot of people look at that at the bullets, you put the sell order below that one to catch the fake move. It's gonna be very good. Or even if that candle locate in the position where everybody will say it's gonna be sell signal, you put the buy stop above that one to catch the fake move. I think that would be a very good one.
Yeah, normally the price is not at the corner of the box. So the price is somewhere in the box, and then you have time to place the orders.
Sorry, I was AFK for a bit there. Are we still talking about the box strategy?
Yeah, and it's it's opposite.
Opposite.
Looking for a breakout of the box and then placing an order underneath it.
Yeah. Well, I mean, my orders are always placed while the price is still within the box. Thanks, Swingfish, for the link there. So how do I actually incorporate that into C Trader, Swingfish?
Click on it.
Yeah. So I've downloaded. Do I just open it or
Yeah, just click on it. C Trader will grab it and put it in the documents folder.
Okay, yeah, I've got it in my documents. Yeah. I don't know how to actually get it into. Well, so it's in my documents. I just put it into.
No, just click on the file. The C Trader will open it. And,
okay,
and put it by itself in the documents folder, or you can put it manually in documents. See algo sources, indicators.
See algo. There we go. Got it. Do I have to reboot? Oh no, it's there. Got it.
No, this is gonna be show immediately.
Yeah, no, yeah, it showed. I've got it. Okay. Nice one.
But this is converted code from MetaTrader, so the code is actually kind of ugly. Like I said, it's just a manually created array with 12 price closes. But you can do that much better in C algo by just using the data series.
Okay.
The C Trader API delivers you the data with one command. But MetaTrader is a little bit, old-fashioned. 1980 style.
So I haven't actually used. Oh, hang on. You can do US. Can you get US dollar index in C Trader?
Yeah, but only on Pepperstone, not on IC markets.
Okay. But so how do I? Because I've never used C algo. Do I just add instance and then the currency pair I want it on?
Yeah. Then you see what is this doing.
Okay, nice. Yeah, I'm just having a look through the code, so I'll obviously have to alter it a bit. And but no, I got the gist of that. I've just never used C algo, the actual thing itself.
Try to cast the knife here again with the cat yen. Anybody have opposite idea?
Canadian, you say?
Yeah. Canada dollars yen.
Let's have a look.
Cast a falling knife again. Look on the on 1 hour time frame, these whole structures look very much like Wyckoff pattern, right?
Not sure on that one. Sorry.
Fish.
Yeah.
I wanted to ask you about my expert. You said you have a better idea.
I don't know what type pattern, up or down, but it looks like one of them, right?
Yeah, but I haven't got around to it yet.
You're speaking to me right now, or to
yeah,
straight?
I guess on the weekend we're gonna get this done.
I was just curious about it because I don't want to, I just don't know what to say, but I was like waiting very much time, and I'm still waiting with patience.
With me,
Good.
I have patience.
About what? About the cat yin pair?
Oh. I still have patience, but I would like to know what's the process of improving the expert. I would like to learn your coding,
Yeah, but you have to learn to write code. Yeah. So it's very little to do with algo programming.
Honestly, I wanted it to make it for GFT brokers to trade only Dow Jones and DAX automatically.
Yeah, that's the plan.
I would like to share with you the source, the set files, in as much as you need the money per day. So I wanted to help you in case you need it, because it's a very aggressive, it's a very safe strategy. It risks only 1% per deposit, and it's never failing. The more aggressive the market is, the more profitable this strategy or the expert is, I should say.
We will see about that.
Well, I've done.
I love how he uses the word aggressive and low risk in the same breath length.
It's because it's risking only 1%. So when 1% of drawdown is reached, you instantly get the waters all closed. So it's safe. It's always safe.
I don't understand why you say 1%, because 1% or X% is depend on the one who trade, right?
But it's automatically done.
And that you can code. I mean, I can put 5% or put 0.1%. It depend on how I trade it. The strategy is not depend. I don't know. At least you say about the risk rewards, that will be totally different thing. But if you talk only about the risk part, why is it 1%?
Because it's a high frequency trading style, hyperactive scalper, trend following. So in case a flash crash happens, it's taking the profits through hard stops.
X-Trade, you're not the only one who's confused. Don't worry.
Yeah.
Could we sorted that out?
I'm frankly with Daniel, because I took him very much friendly, and I know that he really want to have, but sometimes maybe his way of communication is not really clear and good enough.
Because I noticed.
I will have a look on the code in the weekend or so, and then I'm gonna check on the money management as well.
Thank you, Fish. I really appreciate it.
That's good. Yeah. Actually, I just want to say 1 or 2 or 3% is depend on it depend on the person. But okay, without looking into your code, I should not say anything.
Okay. Just give me a second to enter the ADS broker so that I can show some results with my expert. Forward test, not back test.
Yeah, backtesting is useless anyway.
Yeah, exactly. Just a moment.
Yeah, Daniel's bot actually works. It just have the problem that it sends too many auto requests.
That's the point. Because I got I got a warning from the broker that is gonna disable my account because of too many trades. So I'm doing like 10,000 trades per day in HFT style. All of them closing and opening opening and closing in like 17 seconds each order.
Yeah, so much for algo friendly. Blah blah blah. Yeah. It's all just advertising.
Exactly. No, it's just I try to explain my strategy.
Yeah, it's not about you or your bot. It's about the broker, because the broker has on his website very big, we are algo friendly, and then you install an algo and actually run it, and then they say they're gonna cancel your account.
I thought the more you trade, the more broker would like it, right?
Yeah, because they make a ton of commissions. But
so why they don't like it?
No, Daniel's bot is actually bad for brokers because it doesn't. It places stop orders, but deletes them if they become irrelevant.
So
the broker doesn't make any money if the order is never executed.
I see. So they handle a lot of signal, but no actually transaction.
Yeah, exactly. The bot places like whatever 1,000 orders, but only maybe 15 of them are being actually executed.
Oh, I got it. They will hate it because it will be overload their traffic and got no relevant. Very inefficient.
This is my results on the expert on forward test. 1,300% return on investment. I mean 1,200%. This started from exactly 1,000, and I've done it in like less than 1 week.
That's so sexy.
Yeah.
I mean, I'm liking the sound of that.
I have to admit, I might.
Can you scroll up in the list, please, from the beginning, where the account balance is about 1,000? Just scroll up and make the screenshot again, and post it in hodlmybeer, please.
Can I connect it to my FX book so that I can show all the trades? Because it's impossible. I have like more than 50,000 trades here.
Yeah, just post.
Bunch.
Just post. I think I have it on the watch list. Just a second.
Yeah, exactly. It will take a little time, but I will connect the account, the link to my FX book, and we'll send to you.
All right.
In like 1 hour. It takes time until it's verified because a lot of trades, you know.
Is that real money or is that demo?
Demo, but okay. It's low spread, so anyway, the same conditions.
I mean, 1,000% in a week. I mean, I'm listening.
Yeah, there's no way to do that on a real money account.
No, I wouldn't think there would be, but still. I mean,
but even if it's just 10% of the demo results, it's still good.
Exactly, but brokers are particularly not concerned about your profits. They're concerned about your messages, server requests, about deleting, opening, and deleting the pending orders. So when you abuse the broker server, you can
You don't have to worry about that. If you trade an algo like that and you're executing 12,000 trades in a week, they're gonna love you. So don't worry about that.
Why? Because it's disabling my account. I got one account disabled.
Yeah, this is because you're flooding the demo servers for no reason. But if you put real money on it and you paying them 12,000 times commission,
oh, they're gonna love that.
They're gonna love you. Their sales reps gonna call you every week. Don't worry.
Nice. Actually, I put it on my tick mail broker, so they got a warning. I got a warning from them, so they wanted to block my IP because I was about to shut their server down. A whole demo server down.
Because you actually do hacking there.
Yeah, it's not a joke.
It's not a joke from your side, but for them it's kind of joke because they don't see the real money, but
yeah, they're gonna hacking the demo server.
You can laugh as much as you want, but let me just share the link as soon as possible. Okay, I will try to send it.
So did you make this algo?
At 60%, I combined it from another robots, but particularly I've made some parts of it. It has yeah.
Well, I mean, I'm just interested. Yeah, I mean, how it would work. Yeah, that's so funny though, honestly.
So the moral of this is, if you want to annoy a broker, here's a great way of doing it.
Yeah, no, they would hate this because on a demo account anyway. Because yeah, it's just overloading servers for no reason, isn't it?
Yeah, so it's therefore abusive.
Have you tried this? Have you tried it with real money though?
I tried it, but before I didn't try before with this very algo because I've updated it. I have updated it in a certain periods of time. I made it spread resistant. I tested it on a $65 account, so it was like shit.
Is it compatible? Is it like a C? Is it a C trader? Is it a C algo, or is it on MetaTrader?
It's on MetaTrader 4, but it's available to convert it in C algo, also MetaTrader 5. But I should say that IC markets, for a reason, they would not allow this type of abusive trading because they allow maximum 2,000 requests per day in terms of trading.
Yeah, that's why we're gonna change the code and don't make 0 requests. But then the accumulation will change, and you're gonna have slippage and all this kind of stuff. So we have to expect at least half of the profits.
I mean, heck, I'll take half. I'll take 10%. Just yeah, that's.
Imagine trading that style on a fixed spread account, like TD Invest has fixed spread accounts. You have to put in 150k, but that would be massive. But they sure gonna kick you out very, very quickly.
Yeah, no. I mean, so are you thinking of altering this algo swing push? Are you gonna alter it or something and make it more kind of broker friendly, as it were?
Yeah. By instead of placing the orders, we just storing them in a database.
Yeah.
And and if the trigger moment happens, then we're just placing market orders. So we have 15,000 orders in the database and maybe 100 being executed. So whatever.
Okay. What does this what does this strategy actually go by? Like what triggers the orders, or the pending orders rather?
That's for Daniel to explain.
Yeah, I was gonna say Daniel. He's the master. Yeah, Daniel, how does what sort of criteria does it set for an order to be triggered?
The concept is very simple. It has a trigger order. It has a come on. I need to concentrate. It has a trigger, and if a price goes up for a certain amount of points in terms of after pips one dot of after pip points, you know what I mean?
Yeah, I know what you mean. Yeah.
Okay, if it goes some points up or down, it doesn't matter which direction it goes. So if it catches the pending order, it's when the trigger is when the price is moving, the pending order is triggered. So when it goes further, the price is touched. So in conclusion, buy entry is made in case the price goes up, or vice versa. So the pending order, buy stop or sell stop, is just being touched and generating profits for trailing stops.
For trailing stops, okay.
Yeah.
Are they is it stop orders?
Yes.
Yeah.
Yeah, that's the problem. You have to get rid of them.
Because I'm guessing you're placing loads and loads and loads and loads of stop orders, aren't you?
Yeah, exactly, and they're being deleted if they become invalid.
Yeah. I see a problem.
I would like to really, just make it very simple self orders, hidden pending orders, because it would be more comfortable for broker and me also, not to load the server.
Well, yeah, you get to make some money, and the broker gets to also make some commission.
It took me 2 years to figure out how to code this expert, but
really?
I'm not able to finish the last part, which Swingfish is gonna help me with.
I see. Yeah.
Because I am not able to do that.
Sounds like you might be onto something. I'm no algo expert, but it sounds. I mean, then again, I do know there are lots of. Has it sort of blown up any accounts? Because I know a lot of algos, you get amazing profits for kind of a week or 2 weeks or something, and then randomly you just get like an account blow up.
I can't. Sorry for inconvenience, but I cannot share my FX book link because it's pending. It's not active, so it's pending, like this.
Yeah, it has to be verified. You must place an order with the password they give you.
It has too many positions open, so I'm gonna share with you the investor to make you see the results with your eyes. Just wait a second for writing the details. Just a second. Okay, so that's it. The investor. If you can find the server, it's ADS Securities Broker. I'm writing down ADS. I suggest you to take to check for yourselves, maybe, because I'm not able to put it on my FX book. Do you guys see it? Hello?
Still on it.
I just tested in case that anyone is active here. The voice.
Yeah, no, I'm still active. Yeah, I'm listening.
Great. Do you guys see the account results?
Are you sure the server name is correct?
The investor or server?
The server.
Yeah.
I find it's just very slow.
So, I mean, do you think this algo has potential, or do you think maybe it's going to be quite hard to edit it to be actually usable?
Of course it has potential. If I was aware it had no potential, I wouldn't be down to code it or improve it, you know?
Yeah, I know what you mean, yeah.
It took me very much time, but I feel like something is missing, so Fish is gonna help me. Frankie, your cat is beautiful from the avatar.
Oh, I'm gonna be off now actually, but you know, Dan, if you get this strategy working, you know, just if it does generate you some profits like that, you know, let us know. Yeah. Anyway,
Yeah,
see you
sure.
guys. See you guys.
See you.
Yeah, I cannot really make any statistics because the asset is called a different name.
Do you see the account?
Yeah, it works. Everything works fine. I just cannot export it. Do you run this on a server or just when your computer is on?
When my computer is on, because the stock's open.
I was just curious because there's no trade. All right, that's fine.
Okay. Oh my God. 30 minutes ago until Reserve Bank of New Zealand rate statement goes. Interest rate decision.
There's gonna be no change, all right?
Maybe it's a bullish New Zealand right now. New Zealand dollar.
Yeah, it's just fear anyway.
Fear?
Fear.
As you can notice here in this graphic, in this chart, it's going down. So it's a bullish New Zealand dollar. It's going down, like, you know.
Invalid account? Oh, I fucking hate C-Trader. I fucking hate MetaTrader.
I understand you. Because it's old-fashioned. I have to admit. It's very fundamental, primitive as shit.
Yeah, it feels like 1980 or something.
For example,
Back to the Future.
Yeah.
Alright, it works. It just keep telling me the account is not correct. I was logged in like 5 minutes ago. No, it works.
I didn't change the password.
No, it's just MetaTrader. It's just stupid. Being stupid.
I see. Is Wanda a Polish broker? Frankie is still alive? on my thinking is that he's sleeping now.
Alright boys, I'm gonna close up shop too. Have to be back in about 3 hours for the Asian session. Make some money.
Okay, sleep tight, boss. Fish.
No boss here.
Okay, fish, Mario. Good night.
Yeah, good night.
you